Yo, what up fam? I'm back and welcome back to my channel. I do apologize guys, last week I didn't really record and I'm speaking a bit quieter because it is early in the morning right now. Don't want to really be a bother to anyone. But last week I didn't record a video and basically I've had a lot of things going on with my life right now. Just moved into a new place, so we're doing renovations. It's just been too crazy, but I have been trading. I am in an AJ trade. I have marked up my fundamental analysis for last week, but I haven't recorded that video and I probably won't do it. We'll just go bust out 2nd of June to the 8th of June. It will include figures from last week anyways. But yeah, quite an interesting May. It was definitely not the best, but June should pick up. From last year June results, we did have a good trading month for June, so let's just go straight into it. So as per usual guys, this is not financial advice. This is just merely my take on the markets and what I see. Please do your own research and make your own informed decisions when investing your money into the markets. COT reporting. So last week we had bullishness on US 30, S&P, so the indices were going up. We had bullishness on gold as well, and the pound. This week, quite neutral. We have that reverse flip of US 30 back into sort of bearish territory, as well as the yen. 10-year bonds going up, so maybe a bit of strength in the US dollar, but again, it's just COT reporting. US data, we had big week, which is NFP. We had ISM manufacturing and services actually becoming bearish compared to forecasted. However, average hourly earnings, NFP, job openings was all bullish, which really ticked USD in favor of it being bullish. Fundamentally, at least, inflation's always obviously going down, so the dollar might be going down, but I'm liking the economic and labor market readings. I think we do have grounds to actually enter a US 30 trade depending on the technical setup. Aussie, we had GDP, which was bearish compared to forecasted, ticked that into AUD bearish. Still overall bearish, but just a little road bump there. Yen, we had two bearish readings for average cash earnings, as well as household spending. So yeah, and look how big that forecasted to the current household spending is. So this really flipped bearish for the yen. I'm actually quite bearish overall for the yen right now compared to the other currencies, but again, we're going to err on the side of caution because there is some strength, especially in these CPI readings. So, and everything is based off the market's perception and not what's actually the figures per se. So if people are expecting, it's the difference between forecast and current, not the actual figures. So just keeping that in mind. It's priced in essentially. In terms of the graphs, we had GDP AUD, so year on year, we can see it's coming back up. Did have a nice bump for that quarter there, which was Q4. Yep, Q4. Q1 always starts a little bit slower, so I'm liking the trajectory. I'm liking that it's still hovering. A lot of sort of, if we want to use the term consolidating around here, maybe we might see it go up and a bit of strength in the Aussie. ISM manufacturing and services, guys can see it's trending down for the ISM's purchases manufacturing index, which is where I'm sort of having a little bit of, oh shit, maybe the indices might not be something good to invest in, but all the other figures are quite strong. We can get into a trade in US 30. I'll put it in a lower risk if I do with a good setup. Also ISM, you can see it is contracting overall for the manufacturing section, and it is slowing down for the services. So the first month of contraction for the services, which is very interesting to see. New orders, which is what we typically tend to focus on, you can see it's contracting, 4 months of contraction. New orders here, it is the first month, so might be signs of a struggling US economy, but again, the fundamentals don't lie. It's overall looking bullish. Position size and entry and cream of the crop trading criteria will lead me into entering this trade or not. If it's not perfect, or if it's not beautiful, setup, I'm not going to take it just because of these slight fundamental errors or differences. Average hourly earnings, you guys can see it's pumped back up higher than expected. And what I've done was, we see a lot of the forecast percent being 0.3 for average hourly earnings. So we can basically, just make sure if it's above or below, we have an indication of strength. If that's strength for sure, that's definitely weakness. But that's a big strength here in February, and I'm sure if we go back, we can see a pump up on the indices or the US dollar on that reading there. NFP still going down from before, right? So if we got to see, we got to call it as it is. It's gone down. It's as simple as that. It did pump up on this reading here, but it's fizzing back down. JOLTS, job openings, same deal, fizzling down. Unemployment rate, the good thing is this is consolidating. So we don't want that going any higher. And I feel like unemployment is a big thing. I put a lot of strength in unemployment over the job openings. I think this is a very key indicator, and the fact that it's consolidating is a good sign. Now, I've done a new sort of thing here. I've popped in the main speeches that I'm going to follow. We had RBA monetary policy meeting minutes this week, where cash rate, again, they've just confirmed the cash rate cut by 25 basis points, which is inherently dovish. However, that was priced in. People were expecting a 25 basis points cut. They weren't expecting a 50. They were expecting the rates to be held. So just to keep that in mind, the statement emphasizes downside risk to global plus domestic growth due to trade tension policies, which we know is happening right now with Trump. And the board discusses a path of least regret approach, likely easing given uncertainty. So it's still uncertain. I give it a neutral reading. And if we flip to the hawkish side, although 25 basis points is dovish, they're cutting rates. What I've written down was, look, RBA acknowledges domestic conditions have not significantly deteriorated. There's a bit of strength still. 25 basis points cut rather than 50. Caution and data dependence. This is what they've said. They said they also judged that it was not time to move monetary policy to an expansionary stance, taking account of the range of estimates involved, given that inflation was yet to return sustainable to the midpoint of the target range, and the staff's assessment that the labour market was still tight. What this is saying to me is, again, future projecting is, hey, inflation still might be sticky, guys. It's still not at the midpoint of our target range, 2 to 3, and we still believe the labour market is tight, which means we might hold onto these rates. We might not cut again, which is inherently dovish, right? We might not cut again. So because price is priced in, I'm expecting this to be the sentiment is, okay, there's a bit of caution right now. Maybe we might actually hold rates. And if we do, putting the two together, just generally, right, general economics is strength in Aussie. Just based on that one fact. Obviously, we'll have a look at the economic and the labour market and all that sort of stuff fundamentally, but based on that sentiment data, I popped it in as neutral. It could have been a dovish. Look, that's what I said. It's overall dovish, but we can see that 25 basis points cut was already predicted. So something to take hold of, guys. This speeches section, I'm not going to go into too much detail. It's more for me than you guys, to be honest. You can pause it, have a read of what I've written down. But I'm going to have these speeches area filled in, and every time there's a new date, I'll pop it in and really follow the sentiment from these key statements. I think it's going to be a big change in my trading. It'll at least point me to the right direction from a sentiment point of view, and if sentiment's good, if everything's lining up, I might add more size. It's just going to be another good thing, another tool in my toolbox. Not complicating the technicals, but just understanding the story more. So that's what I wanted to go through, guys. I didn't fill this shit in. Let's just skip this. I've been busy, bro. I've been busy. So bias wise, we had neutral cut for gold. It's actually quite bearish on gold right now because what the increase in US economic reading, again, this is my fundamental analysis, and the bullishness in the US labor market, or the better readings in the labor market, we could actually trade gold to the downside, but there's still uncertainty. Technicals aren't great, and I'm on a loss streak, so I don't have the privilege to actually put size and make good trades. I'm not up. I'm down right now, which isn't a good mindset to trade in because we should be trading specifically to our criteria. But you guys can see it's still iffy. It's still not perfectly clear that we're in a risk-on buy environment. People still don't know if it's gold or US 30 or S&P 500 that they need to put their money in. So we're on the side for gold. On the flip side, US 30, we've got bearish cut reporting. I could take that into mind, but we do have bullishness on the economic news, and I am biased bullish. I'll say that right now. So basically what we have is a decrease in US inflation that's positive, increase in US economic data that's positive, bullish labor market data that's positive. We're ready to trade this on the long side. The only caveat to that is the cut reporting. We might trade 2% instead of 3%, so that's 200 USD instead of 300 USD, which is our max allocation for a trade. So that's US 30. AU, we have some strength in Aussie, we have some weakness in USD. We're quite neutral. Keep it neutral. Done. UJ, strength in the US dollar, a bit of weakness in the yen, but still neutral overall. Still has some indication of strength. No trades. Same as AJ, no trades. So you guys can see that's how I'm breaking down my trades. It is methodical, but it's not clearly methodical. It's methodical enough to where I'm confident to take trades and have the story built up. So US 30, that's the only one I'll be trading. Let's actually have a look at my AJ trade, which I'm in currently. I will be trailing this one, but let's have a look. Change this to 1. Let's have a look at everything first. So Aussie coming up, dollar index, Aussie index, sorry. Dollar going down slightly, might be coming back up to this line, still going down. Yen consolidating, potentially coming down. So that's the indices. AJ, this is my AJ trade right now, guys. I am going to move the stop. It's broken here, right? Break a structure. Where is my line? Where is my line? Alright, well fuck. We'll just put this break a structure here. Right? Break a structure from the 4 hourly. Look at that resistance, that rejection wick. So the fact that it broke here, I'm actually going to put my stop under here. Let's put it a bit lower. Maybe somewhere here. Right? Maybe here. No, let's put it here. 0.2. Okay, cool. I haven't moved my stop yet, but I will be moving my stop there. And if we get tagged out, we get tagged out. Fundamentally, it's changed anyways, the reading. So I'm actually really happy with this trade. Yeah, we're going to trail this trade now on a 4 hourly high, low, high, low, high, low. So perfect. We got a risk off trade right now. Fundamentals have shifted to indicate like neutrality between AJ and, I'm going to trail this bad boy, take the risk off the table. AU, let's have a look at AU. I've popped this here. It's that consolidation box. Still not touching shit. UJ, see, same deal. We're finding support many times. We do have a big rejection wick here, and again, fundamentals don't make sense to me right now between USD and JPY, so we're on the sidelines. We don't want to just keep catching a falling knife, so that's that. Gold, you guys can see I popped a box in there. Reason so, I just want to make it clear. There's no certainty right now in this market. This is all-time highs there, big rejection wick, big rejection there. I'm not trading this bad boy. We're leaving it on the side. Now US 30 on the other hand. US 30, we've got this resistance point here. We've got this support here, right? Get rid of this. That's the only two zones I care about. if I prefer this scenario to play out where it breaks and retests, that's the better scenario. If it comes down here and gives me enough of a rejection, you know, it gives me a really nice 4-hourly rejection here, I might take this. But again, 2% risk, lower risk compared to my normal trade if I was confident. So that's that, guys. If we were to go in our journal, May's not done yet. I am in that AJ trade which was taken in May. So we're still in this trade, or is it this trade? No, it'll be another trade, sorry. So it'll be another trade here. Okay, it'll be another trade here right now. That was on AJ. This was a buy. I'll fill it up later, but you guys can see I am in a little bit of a loss streak for me. Sizing wise, we did size up to that 3%, which I'm not regretting. We're confident right now. This was an added position on AU, so 1% for my added, 2% for, you know, B plus A setups, or B plus A minus setups, and then A plus setups. We go the full 3%. So yeah, I've popped this rating here. I thought it was an A, but it wasn't. It's more like a B setup. So it is what it is. We'll go in depth for our May schedule when the time comes. But yeah, it's a red month. It is what it is. We've had so many other green months. Like this was meant to be green. Obviously, that was an error in position size, so that's my fault in itself. This was green here, big one. This was just a 1%, one loss here. You know, this would be now, that's an added position there. So this would be technically a 3 loss here. If we count that break even, if we count that as one trading idea per se. So I'm not fast. This is part of trading. This is where we're in half of the year now, heading into Q3 next month. Let's see how it goes, guys. I'm actually putting in some decent size now, 300, 200 USD per trade. If I can get 2R per month, 600 USD per month, it's something, right? Something to start with. And if we can build that confidence, start scaling up, get to this point where we're risking 500 USD, 500, 300 USD, 600, 400, you know, eventually we'll work our way to risking 1,000 to 700, let's just say. That's our two depth points. So very excited, very, very excited for the rest of the year. It's time where I've really built confidence in myself. I've been through the drawdown periods. I know what trading looks like now. I know things are in my favor. Just got to rinse and repeat. So catch you guys on the next one. Peace.